Hello, everyone. My name is John Cunnison. I'm the Chief Investment Officer at Baker Boyer Bank. Thanks for joining me today for our monthly market update. Today, we're going to be talking about some of the things that are driving markets. In particular, we're going to talk about Iran. We're going to talk about the conflict there. We're going to talk about private markets. And we're going to talk about some market moves that are happening underneath the surface, which I think are important to point out. Now, there's a famous fund manager. His name's Ron Barron. And I watched a really interesting interview with him. And one of the comments he made was, if he had waited for news to be good to invest, the only year he would have invested was 1989, the year the Berlin Wall fell. Right? There's always something going on, always news that we wish was better. Now, it's important for all of us to understand that when we do these updates with you, when we talk to you at your investment reviews, we're not trying to predict markets, right? Our goal is to provide context, right? And that context allows investors to stay disciplined. And as we've said many times in this format, discipline is truly the key to long-term investment success. Let's get to Iran. There are really, the first thing to note about Iran is when we look at how markets have reacted, the first thing to note is that the market reaction has been very disciplined. Right? The key market to look at when we're thinking about Iran is the oil markets. Oil markets predictably have gone up, right? So oil prices have gone from, in the 60s and 70s to close to $80 a barrel. That's a fairly modest move relative to what we're seeing in the Middle East, and it suggests that supplies of oil are adequate for the moment, right? And the other thing that's really important about oil markets is that oil markets are very sophisticated commodity markets. The people who are involved in trading oil, these are very well-informed investors, and these are people with real assets at stake. So when we watch oil prices move, it's a pretty good indicator of at least market perception of risk, right? And right now, that move in oil prices was very orderly, and it's exactly what we'd expect. When we look at broader markets, look at stock markets, the move has actually been fairly modest, particularly given that we're talking about a fairly major conflict in the Middle East. Right? So we saw stock prices come off, looking at week to date, come off, just over 1%. And that's a fairly modest move in stock markets. So the markets are actually taking this in stride. When we think about what this means for you and your investments, I think the key is diversification. Right? And when I get to the end of this presentation, the third section, we're going to talk about some of those underlying moves. I'm going to talk to you about the importance of real assets in your portfolio. And that's an area of the market, an area of your portfolios that's actually performing quite well right now. I do want to take just a moment to talk about something that may not be in your news feed, and that's private credit markets. Right? What is private credit? Well, most of us, when we build portfolios, when we think about the stock market, we're talking about publicly traded assets. Right? These are companies that have listed their shares on a public exchange, right? And their shares trade, right? That's the minority of assets in the world. The majority are private assets, right? And those private assets can be an important place for investors to have exposure to investment opportunities, right? And recently, we've seen those private credit markets grow a lot. So for the last 15 years, those credit markets have grown from about $200 billion in assets to over $3 trillion. Recently, we've seen attempts to make access to those markets more available to the public, so more available to retail investors. What I want to just mention today is that there are risks that are in private markets that you're not going to find in public markets. And it's really important to understand what those risks are, because there's an attempt right now to what they, I guess I would say, quote unquote, democratize those markets, make them accessible to you and me in our 401k accounts. Now, what's very different about public markets versus private markets is that private markets are illiquid, right? If I own private assets, I can't go into my computer and enter a trade to say, sell, I need that money for an emergency, or I need that money for some other reason. I can't do that, right? That liquidity, the ability to turn those investments into cash that I can use is limited. Right? So what we're seeing right now is a company called Blue Owl. And Blue Owl limited those redemptions recently, and it caused a little bit of a panic in private markets. When that happened, those prices fell, but people aren't able to exit those investments. Right? So that there are risks here, and it requires sophisticated due diligence, sophisticated research to understand what they're invested in and the quality of those investments. So this is just, I guess I would call this a public service announcement to say, when you hear about investments that have high potential returns, low volatility, and they're touted as safe, beware, right? High potential returns and safety often means buyer beware. If you have any questions about private assets, reach out to a member of the Baker Boyer team. The third thing that I want to talk about today are some underlying trends that we're seeing in markets that I think are very interesting and have important implications for portfolios. During the last 2 decades, it's an era that many economists are calling an era of abundance, right? And we're moving into what many economists would describe as an era of scarcity. And what do I mean by that? In the previous 2 decades, we went through a period where there was a lot of investment that was going into what I would call capital light businesses. Capital heavy businesses were not getting as much investment. There was much less investment in real assets, in metals and mining, right? In all sorts of natural resources. The investments that were going into capital light businesses include companies like Microsoft, things we know well, right? What did Microsoft do? Well, Microsoft created software, right? It was a wonderful business because each incremental product they sold, call it, Microsoft Office software, right? What was their cost to produce that next incremental product? Essentially zero. That's a wonderful business to be in. It attracted a lot of capital, a lot of investment. But at the same time, there wasn't as much investment going into real assets, right? So prices of those things fell, and capacity in those areas dramatically fell. And here I'm talking about factories, as I said, natural resources. Today, we're moving into an era of scarcity. Why? Well, when we look at AI, we often think of AI as something like those software businesses, right? This is a digital business. It is, but it has a very real component to it. In order for AI companies to be successful, to produce the large language models that we all enjoy using, right, it requires these enormous investments in large data centers. Those data centers require all sorts of metals and mining. It requires HVAC systems. It requires power, right? And that power requires all sorts of natural resources. It's really important for us to understand that although AI is this thing we do on our computers behind the scenes, there's a very real economy aspect to it, right? Well, because of the underinvestment we saw for the last 2 decades, there's going to have to be an enormous investment in real assets. So a really wonderful place to find some diversification right now is in that real asset space. So when we're building portfolios today, we can diversify using those assets. And it's a great place to do it. We're seeing a lot of resilience there, even with geopolitical conflict that we're seeing today. So in all the portfolios that we're building, of course, the watchword for Baker Boyer portfolios is diversification. And one of the aspects of that is a real assets portfolio. And it's been doing beautifully year to date. If you have any questions about anything I've talked about here today, or anything else, please reach out to me or a member of your Baker Boyer team, and we'd be happy to help. Thanks for joining me today, and take care.